Hi guys, do you want a slice of Australia? Do you want a piece of the very best companies that Australia has to offer and then let them pay you the profits? In this video, we're going to look at the ticker symbol VAS on the Australian Stock Exchange. And if you're from the US or the UK or any other part of the world, don't go away, because this stock can be a great asset to your portfolio as well. Because in Australia, we do great dividend stocks. Great income producing businesses that will pay you cash to own. Hi guys, it's Lee here. On this channel we talk about business, investing and being an entrepreneur. If you like any of those things, please subscribe, hit the little bell and give us a big fat thumbs up. Today guys, we're going to look at one of my favorite investments, and that's the Vanguard Australian Shares Indexed ETF Fund. This ETF tracks the S&P ASX 300. What does that mean? It means that your investment basically takes part and owns 300 of the very best Australian companies at the moment. It means that you can claim your piece of the Australian dream. Put another shrimp on the barbie, mate. And please wait till the end of this video, because I will tell you why I love this stock so much, VAS. It's a great investment. It's broadly diversified across 300 of the greatest companies in Australia. It's well diversified. What does that mean? It means that your money, your investment, is diversified over 300 companies which do different things. And it's actually also low risk. You see, the beautiful thing is when you invest in this fund and you invest in the top 300 companies in Australia right now. But what happens is, what if one company starts to not do so well and perform poorly, and its dividends are low and it has to cut them off? If that company goes bankrupt, for instance, and what happens is it drops out of that fund, out of that index, it drops out of the ASX 300 index, and a better Australian company takes its place. So in 30 years time, you might still own the top 300 Australian companies, but they might be slightly different. Some might have dropped out and gone bankrupt and being replaced by other, better, efficient companies, which I think is pretty cool. People like me don't have time to pick stocks. I don't have time to research companies. That's not my job, and it's not what I'm great at. I'm great at running my businesses and making money in those businesses. So a fund like this is great for a passive investor. What? It's great for those seeking long-term capital growth, and it's also great for those seeking tax-effective income in the form of dividend. And like I said, it's great for the buy and hold investor, the set and forget investor, the passive investor. What? So like I said, the VAS is great for long-term capital growth over the long term, as you can see in this chart. And it has a great dividend yield, which is paid out quarterly, which is quite good. Us Aussies, we love our dividends. It's a safe, diversified, low risk, long-term investment with great dividend payments. The other great thing about VAS is its very, very low fees. At the moment, the fees are 0.1% per annum, which is very low, seeing that some mutual funds, which can't even beat the S&P index, charge you at least 2%. And look guys, fees are really, really important to the long-term investor. 2% doesn't seem like much, but over the long term, it can cost you thousands, if not millions. Say if you put $400 a week into this fund for 35 years, and it grew on its average rate of return of approximately 8%. Now that's 4 to 5% capital growth and 4% dividend payments that you reinvest back into the fund. And that's going through all the big market crashes and all the big gains over 35 years. At the end of 35 years, you could have close to $4 million by just $400 a week for the next 35 years. But if you hired a fund manager who took 2%, doesn't seem like much. But if he took 2% out of your investment, you would lose $1.5 million. You'd be basically paying him over 35 years $1.5 million, and you would have an investment that's only worth $2.5 million. It's just crazy, isn't it? Some people call it death by 1,000 cuts. There's all these little fees and things that go unnoticed in mutual funds and superannuation, that eventually it's death by 1,000 cuts. And at the end of it, you've almost got hardly anything left. Don't do it. Become your own fund manager. And I can tell you this of a truth: no one cares about your money as much as you do. The great thing about VAS is it has a dividend reinvestment plan, which means that you can get the money that's paid to you in dividends. You can choose not to cash that out, and you can say to the company, look, I'm not ready to have an income yet. With that income, why don't you buy me more shares? And by doing that, by not cashing out, you basically save money on tax. Guys, thanks for coming this far. Now, I personally am going to tell you why I love this fund, the Vanguard Australian Shares Index Fund ETF. I love this fund because I am a passive investor. What? And I don't get excited about reading reports on businesses and things like that, trying to find a great and beautiful business. You see, my job is to run my business, and I know it really well, and I do a good job of it. But I'm so flat out running my businesses, and I'm better at being an entrepreneur than I am reading reports on businesses and finding the best stock pick to buy. I'm flat out running my job and my businesses, and I'm flat out with my kids in my spiritual life as well. I'm so busy. But because I do these other things so well, I want to put my money into something that is safe. I want to be able to buy the Australian dream, the top 300 companies in Australia, and forget about it. I don't want to do stock evaluations and read reports. I find it boring, and that's not my job. I'm not great at it. But you know, sometimes I will read the odd report and try to understand a business. And if I'm looking at a company that I would really like to buy, a company like Xero, for example. So I'm great at running my businesses, and that's where I want to put the majority of my time and effort. But I also know the importance and the wisdom to save money and to invest it and to have that money work for you, and have that money that's being produced work for you again and again, and it compounds and it grows over time to look after yourself in retirement. And the Vanguard Australian Shares Index Fund does exactly that. It follows the top 300 companies of Australia. By buying the S&P ASX 300, you're betting on the Australian dream. And I live here, and I love it. You get a slice of the best 300 companies now, and you also get a slice 35 years in the future, whatever those top 300 companies will be in 35 years' time. And just let the science and the power of compound interest do its work with your investment, and watch that baby grow over time. So then when it comes time to retire, you aren't working for money. Money is working for you. And guys, if you like this video, please subscribe, share it to your friends, and please leave us a like, give us a thumbs up. And I'd love to hear your comments on the Vanguard Australian Shares Index Fund ETF.